Breaking news. Tonight's story isn't about politics. And you guys, it isn't about who's right or even who's wrong. It's about one date, July 29th, because one of the nation's best known market forecasters says that by July 29th, investors could begin witnessing the event that exposes what he believes is one of the largest financial bubbles in modern history. He's warning it could ultimately lead to losses approaching 80%. Similar to, you guys, what happened during the dot-com collapse, okay? So before we go any further, let me be clear. These are his predictions, okay? Now, he is an economist, an attorney, and an investment strategist, Jim Rickards, who has built his reputation by warning about financial crisis before they unfolded. Now, will he be right this time? Well, no one knows. But history has taught us something very important. When respected experts begin sounding alarms, it's usually worth understanding why. So, let's separate the facts from the forecasts. So, who is Jim Rickards? If you've never heard his name, well, you probably should. Jim Rickards has spent decades working in international finance and advising government agencies on financial risk. He has written extensively about financial crisis and is known for warning about the 2008 financial crisis and the market turmoil surrounding the COVID-19 pandemic before those events unfolded. And again, that doesn't mean every prediction he makes will come true. However, nobody predicts markets perfectly. But when someone with that resume makes a prediction this bold, investors should at least understand his reasoning before dismissing it. So why July 29th? Well, according to Rickards, July 29th could become a critical date because several companies connected to the AI economy are expected to report financial information around that time. And he argues those reports could expose financial weaknesses that many investors aren't paying attention to today. His concern isn't that artificial intelligence is a bad technology. In fact, he believes AI will change the world for the better. His concern is something entirely different. It's called valuation. History has repeatedly shown that great technology and great investments are not always the same thing. So history has seen this move and this movie before. In the 1920s, it was radio. Investors believed radio would change everything, and they were right. But many radio stocks still collapsed. In the 1990s, it was the internet. Investors believed the internet world, it would transform our world. And again, they were absolutely right. Cisco became the most valuable company on earth. And then its stock fell nearly 90%. It took roughly 25 years to recover. The internet changed civilization. Investors who bought at that time, well, it was the wrong time, and they lost fortunes. Rickards believes AI may be following a similar pattern. Now listen, he's not the only one asking questions, you guys. Rickards is not alone. Michael Burry, the investor portrayed in The Big Short, has publicly warned that today's AI excitement resembles previous speculative bubbles. Ray Dalio has discussed elevated market valuations while reducing exposure to several large technology holdings. Warren Buffett has accumulated one of the largest cash positions in Berkshire Hathaway's history while trimming major stock holdings although he has not publicly predicted an AI crash. Peter Thiel, SoftBank, and other large investors have also made significant changes to their AI-related investment. Now, does that guarantee they're right? Of course not. But when multiple experienced investors begin moving in similar directions, I think it's worth asking what they may be seeing. But here's what really got my attention, and I guess I'll say surprised me at the same time. Some of the caution isn't coming from critics. It's coming from people inside the AI industry. Google CEO Sundar Pichai has acknowledged that parts of today's AI investment environment show signs of irrational behavior. OpenAI CEO Sam Altman has warned that investors may be overly excited about AI and that some people are likely to lose money. Bill Gates has described aspects of the current environment as a frenzy. Jeff Bezos has referred to parts of the AI investment boom as an industrial bubble. Notice what they're saying? None of them are questioning whether AI is revolutionary. They're questioning whether investors have become overly enthusiastic. And there's a huge difference. So, after all that, what should you do? Should you sell everything? Absolutely not. Should you panic? No. But if you're retired, if you're within a few years of retirement, or if a significant portion of your savings is invested in technology, this may be the perfect time to review your portfolio and ask some difficult questions. Not because Jim Rickards says so, not because Michael Burry says so, but because history reminds us that bubbles are usually obvious after they burst. So my challenge to you is this: don't believe me, don't believe Jim Rickards, don't believe television. Research it for yourself. Read Jim Rickards, read Michael Burry, read Howard Marks, read Jeremy Grantham, read Ray Dalio, then read people who disagree with them. Compare the evidence. Challenge your own thinking, because the best investment you'll ever make isn't a stock. It's becoming an informed investor. So, will July 29th become just another ordinary day? Maybe. Will historians one day look back at it as the moment investors finally realized that AI valuations had gotten too far ahead of reality? No one knows yet. But here's what I do know. The people who protect their wealth are rarely the people who panic. They're the people who prepare. So you should too. I'm Monet Swan, and this has been Secure 65 Health Plans Breaking News Update, where seniors thrive. Because protecting your retirement starts with protecting your knowledge.